after a deep thought, of course, and what is happening in the country and the most recent strike that happened of traders about the taxes and all that, among the things that they raised was an issue that was regarding customs valuation, saying URA is maybe different traders bringing in different goods, ending up different traders bringing in the same goods, ending up with different values. So there was a call to unify values. There was a call to be able to understand some of these ways. How does URA do this? And being a consultant in this field, I felt it important to give back to my Business Hub community and be able to share the truth, the facts, the things about taxes, and to go into the depth. Hello, ladies and gentlemen. Welcome back to Business Hub UG. If you haven't subscribed, please, we're getting at a point where we're going to stop asking for subscription because we are going to believe in you guys being able to do this without us asking. And we look forward. But the honest truth is for us to be able to bring to you this educative material and information, we actually need the numbers. So the numbers have the magic. So please tell a friend to tell a friend to tell a friend to subscribe, and together let's learn, let's come and help each other, and let's grow ourselves together. And to go into the depth, first of all, customs valuation. What is it? What is the animal? I know, just like we were saying, IFRS, Mosolo, IFRS, what? Some people may not have heard it, so I can't assume that everyone knows customs valuation. To start with, customs valuation is being able to determine the worth. The worth of the goods or the value, and why it's important, why it needs to be discussed or for us to understand it is because taxes are calculated. Some taxes, the ad valorem ones, are calculated as a percentage of the value of goods. I'll give you an example. You'll bring in TVs and then they'll tell you the excise duty maybe is 25% of the value of the goods, and then the rest of the taxes, maybe VAT being 18% of the value. So those taxes that are calculated as a percentage of the value of the goods are the reason why we want now to dive into customs valuation. For you to understand it, URA omusolo egubaleetya, like value ebintu byange nabigula China nabigula $5 lwaki egamba bya 7 oba oli ebibye nga bamuweredde ku $2 nze lwaki nina $1.8. Some of those things. So the first question is understanding, are there any international rules? Or the first question would be, are there rules that determine the valuation of goods? Like you are a bijawa, what does it base? So there is a World Trade Organization, which is an organization that regulates trade in the whole world. So it's set out what we call the Agreement on Customs Valuation. That's a document, agreement on customs valuation. And URA, Uganda Revenue Authority, together with so many other members, assented to that. It was done in 1994. What that meant, or what that means, is URA, together with other customs, other countries that assented and are members of WTO, have to implement that agreement. So URA cannot wake up and just decide and do things independently, because it subscribes to WTO. So fenga abasuubuzi or fenga abantu fenga abaweebwa omusolo, eyo ye agreement gye tulina okutegeera, so that URA naffe tugiholdinge against that agreement. Eyo agreement egamba ki gye tulina okutegeera. Tumaze ogitegeera kale ebintu babijja mu agreement ne bajja ne babidomesticating. They domesticated it mu East African Customs Management Act. I have put for you a link, mbatereddeko link one, where you can find those two documents for you to read them deeper. But when you go into the East African Customs Management Act, under section 122, you will find that same, they summarized what that agreement talks about. How are you supposed to value the goods that come in the country? So those are the two documents that URA draws its mandate from. Then, now the next question becomes, Kat, what does that agreement say? Your agreement, what are the methods of valuation? Valuation by determining ebintu byange babiwe value based on what? Now that agreement speaks about 6 methods of valuation. Primarily, it says that the valuation of goods should be based on transaction value. Transaction value, if the transaction value is disputed by URA, or the organization that is collecting, then that act gives them the mandate to look for the transaction value of identical goods. It says follow these things in this order. Identical goods, we'll get into the depth of what each of them means. If then they can't find identical goods that came around the same time that your goods came, then that act or that law says they should be able to follow similar goods, the transaction value of similar goods. If they can't find, then they go to deductive value method, then go to computed value method. If that also fails, then they go to fallback method. So those are the methods, the 6 methods of valuation that act talks about. Now that we know the 6, I know your next question will be, zitegezachi, and that is why I am here, to throw light on each of them. Our next question being, what are these methods of valuation? Transaction value method, first of all. Now, transaction value method is the price that has been actually paid or payable for goods when sold for export in the country of importation. In short, they are saying that transaction value of goods is the sente zosasulidde ebintu byo. The money that you paid to the owner, to the person that sold you these goods, the actual value of the goods. So it's either you paid cash or you actually didn't pay these things cash, but you got them on credit. So whether credit or cash, that is what we call the transaction value. Now that value, and the goods should have been sold, meaning that someone should not have just sent you these goods free of charge, or you should not be moving them from one branch to the other. Or they shouldn't be goods which have come in maybe for destruction or on consignment, or goods which are on lease on hire purchase. There should have been a sale. The goods should have been sold. To the country of importation means, they should have sold them to Uganda. Okay? There are moments where basubuzi bannange ebintu muno babiguziza munali Dubai. Kat invoice is between someone who is in China and maybe someone who is in Dubai. Invoices zonna noziteekako nga the transaction is between someone in China and Dubai. But then you want URA to honor that as the transaction value. Nedda amateeka awo gagamba the transaction did not happen to Uganda, country of importation being Uganda. Because remember, moving your goods from Dubai to Uganda, there are other costs that you will incur. So those costs, where will they have gone? So transaction value covers those aspects. There should have been a sale to the country of importation, and then there are adjustments that should have been done. If you have, I'll give an example. If you've had adjustments, okay, maybe the next question would be, what are these adjustments that you're saying? The adjustments here I'm talking about that they talk about in Article 8, if you're defining that your value, it means there are other costs that you're going to incur that are not necessarily the ones of the value of the goods. I don't know if you get me in there. Okay, what I'm trying to say, there are circumstances where you have, say you're paying licenses, some of these adjustments now, you have licenses, trading licenses and royalties. Say, I'll use an example. KFC maybe is just a franchise. You are KFC sells out a name, or you want to trade as KFC in Uganda, and yet you have a franchise, okay? Or call it Shell, or call it any other, just get any brand that is out of this country. And then you want to just sell using their name. There is some money that you pay to them, depending on the conditions that you've had in the contract, that for every money that you make out of this is going to be my money. So some of those, even licenses for you that are require you to trade in particular goods. I'll give you an example of oyagala kuleta ebintu naye Uganda egambye for you to be able to trade maybe in that particular commodity gy'oyagala okuleeta mu ggwanga oyina okusasula license. Okay, and then the other person decides and meets, or you decide and pay the nosasula, the person who is making these goods for you, and then they obtain the license to be able to trade in Uganda. Now, ladies and gentlemen, those costs are compulsory costs. Okay, then the other adjustment will include assets. Assets are things like, only say you are in Uganda, and then for someone to make, you want to send someone in China maybe to make for you leather shoes. Then they tell you they can't be able to find cowhide that is original. Then you decide and say, maybe get a supplier in Kenya and buy these goods from Kenya, the cowhide, and then send them to the person in China. As long as you send them those goods free of charge, and then they do not include it on the goods, then customs has, according to that agreement, kateno agreement jenimbayigiriza, eyo agreement, that agreement says that value should be part of the value of your goods. You should add it. So any goods that you supply free of charge to the supplier to be used in the production of your goods is supposed to form part of the customs value. Some of these things involve maybe design work. Some of you do the assets that I talked about, the things that they can use in production of your goods, for as long as you supplied them free of charge to the supplier, and then they did not include them in the computation, that is added. Then we have things like insurance, and then freight. Freight is the transport cost that is going to move the things from the factory to maybe the ship for you to be able to ship them. Then you also have the one from the ship to Mombasa, or to the point of entry. I'm saying Mombasa because we are landlocked in regards to Uganda. It's landlocked, so our ports are Mombasa, Dar es Salaam. So that transport fee that you incur to bring your goods up to Mombasa is supposed to be part of customs value. Now that customs then you also add insurance, then you will add the cost of packaging, you will add what? Proceeds. Things like, we have circumstances where you have an agreement with the person that is going to sell you these goods, maybe for different reasons. And one of the reasons could be, you say you want to import, say, TVs. Oyagala kuleta TVs mu ggwanga. N'ofunayo omuntu China agenda ozikkolera, or already someone who has actually a brand, say in China or whichever country. And some of us traders are very smart, go out and negotiate and say, I want to market your things, I want to be the supplier, I want to be like, say, the sole distributor of your goods. But then there is no much market in the country. For now, I'm not going to be able to pay you maybe $50 per item like you require. But then you come into agreement and say, okay, you go, let me sell to you these goods at $30 per item. But when you sell these goods, for every good you sell, you send me $20. Okay? Now those are proceeds that go back to the other person. Now that is where some of us come in and say, I bought my goods at $30. No, URA will not honor that, because now that agreement, Jemba Zayo, say customs valuation agreement, says that these proceeds that you're sending back to this owner or to the owner of the goods or the brand, for it, that is also part of the customs value. In short, you should have declared the customs value as $50, not $30. I hope we've gotten the clarity about that. Of course, we have those adjustments which are not compulsory depending on the country, especially even the freight. Now, ladies and gentlemen, the other question that commonly comes in, kakati fababiyisa ku Entebbe airport, freight yafenga mungi, nga our freight is much more. Shall we make any business? Neda URA erimu kutujja mu business because we are passing through the Entebbe airport. No, ladies and gentlemen, actually what customs does is, for goods that come in through Entebbe airport or goods that come by air, when it's computing the customs value, it only adds the cost of goods and the cost of insurance. The cost of freight does not form part of the customs value for goods that come via air. Now that's a policy that is being implemented in Uganda. Mbagambye musubscribe get to Business Hub UG. Kuba wano tuli mukusoma. Okay, now the other question, ladies and gentlemen. I know you have very many questions. I've picked a few that some of you have been asking. Okay, then the other questions that you ask are, what are the conditions for the use of this transaction value? Now, ladies and gentlemen, it doesn't mean that everything that, now this is where customs come in. Abawozi b'omusolo wano we bajja ffe ng'abasuubuzi ne batukubira. Okay, they beat us in the understanding, like where they challenge us. What happens is there are conditions that first must be fulfilled before you even run in documents, ladies and gentlemen. First of all, there should not be restriction on the disposal or use of these goods unless those that are the restrictions that may be about the geographical area. I'll give you an example of what I'm trying to say. If you say you have a distributorship, it's understandable that the person that is selling you the goods will say, as a distributor, you can't go beyond this region. That's very understandable. But where you have conditions that surround the sale of the goods, or you can't sell the goods at this amount of price, then you can't sell these goods before this period time, or you can't sell these goods beyond maybe to these particular people. Now, in such circumstances where you have those restrictions, it means ownership did not pass on from the seller to you, the person that is saying you're the buyer. That means you don't own those goods. And then now customs is not going to consider that as a transaction value. It means the goods are still the goods and a property of the owner. The second condition is there should not be part of the proceeds. No part of the proceeds or any subsequent resale accruing either directly or indirectly should be going back to the buyer. The other condition that I first explained to you is this is what they are trying to say. That if you require that after selling your TVs, maybe $70, for every $70 you sell, $20 you send back to the owner of the brand, then it means the value that you declared originally and they put on the documents was not the value. The value will be the original value plus all these proceeds that you are actually sending back. The other condition that's around that for you to be granted is the buyer, and the relationship between the buyer and the seller should not have affected the transaction. The transaction should not be, okay, being related parties in itself is not enough to deny you transaction value, okay? But now the law empowers you and says that this relationship that you being, okay, I'll give an example of maybe Britannia, and maybe I'll give Manji, and then I'll give House of Dauda in Kenya. Manji is in Kenya, Britannia is in Uganda, House of Dauda oversees all these. However much they are not directly related parties, the fact that you have the same parent, if you have the same parent, you have the same person who is controlling, you have shares in different these companies have shares in each other, one is a branch of the other. For as long as that relationship has affected the price, then that price will not be considered transaction value. Now, how does URA or how does customs determine this? They actually look out for how does this person sell to other buyers on the market, on the open market. Other people that are buying from, say, Manji in Kenya, are they buying at the same price that, say, maybe Britannia is buying from? Other people who are buying from Bata Kenya or whichever country, the prices or their invoices, is it the same price that they are supplying you, the Bata of Uganda? If you meet that qualification and they find that the value is relatively the same, then you'll be granted transaction value. You deserve your transaction value. But where they find that there is a very big difference, or there is a difference between what your parent gives to you versus what they give to a stranger, ladies and gentlemen, then it means your relationship has actually affected the transaction value method. Now, to confirm the transaction value, your next question is, what kind of documents does customs need? Kubaba mumugamba banange customs techa honoring documents, like why documents to the vehicle, even if we bring them, we give them. Customs does not honor them. Meanwhile, what document have you sent out? Because we be doing work, consultancy. I'm an accountant. We do some of these things, but you people. Okay, I'm also a trader, but sometimes you just bring one document and you want on the other side. But if we are going to beat customs, if we are going to beat them at this game, then we need to have our documentation clear. Now, katusomefe abali ku business hub. Documents are divided into 4 categories. Okay? We have what we call the commercial documents. Commercial documents are those documents that you use in maybe deciding the pricing. Jukira, these documents, some of us, okay, these documents follow each other. If you are interested in goods that I am selling as Rhoda, how are you going to express interest? Okay? How are you going to express interest? You're going to first come out and ask about my values, and then I give you a pro forma. After I've given you a pro forma invoice, you look through the values, and then we negotiate and agree. After we've agreed, then you are going to give me a purchases order. And give me an order and say, these are the goods that I want. Your company will process the purchases order. Once you've submitted it, I'll do the purchases order and prepare for you a commercial invoice. Commercial invoice, now I'll put the values that we finally agreed to. I'll make for you a packing list. Afterwards, then you will have a sales contract drafted. That's the order that happens in the international market. But ladies and gentlemen, some of us will have commercial invoice processed before I even did a pro forma invoice. Like how did they send you goods before you even bought them? So logically, some things are not adding up 1 + 1. So those are the commercial documents that you should need. If you're getting into business, engage the people that are selling you these goods and ask for those documents. The second type of documents are the transport documents. Now that you've bought these goods, you know Bitadomo, the documents are there. Then you'll ask for the transport. How are your goods going to move from the factory, depending on the price they have given you? Some people give the quotation and tell you, this price is up to Mombasa. Or they say this price is up to the ship. Or this price is factory price. So how are you going to move these goods from the factory to the ship to? So once the person has indicated on the invoice that their value they have given you is X wax, meaning is factory price, then customs expects that there is transport between the factory and the ship. And ladies and gentlemen, for you've not provided this document, how did you pay it? Please look for the invoice. Don't engage people who are not going to give you receipts. Have that invoice. Then have the invoice of the goods from the ship to the port, because that's also considered. Then have those are the transport documents now that we're looking at. We have the export documents. We have the bill of lading. Bill of lading is when you get your goods on the ship. Then they give you this document. They say, you've loaded your cargo. All these are the details to show that you've actually paid. Then you pay. Once you pay, then they also give you the freight invoice. Some people pay cash and then they get their invoices. Others don't, and then they get the freight debit note. Get the insurance certificate. Get the insurance debit note. All those documents are required as transport documents. Depending, if you have paid things by cash, do not look out for documents of credit. So choose what works for you. So then the other third type of document that URA looks out for are the financial documents. Financial documents are the proof of payment. You have the TT being the telegraphic transfer. You paid your money through the bank because you know you have a policy. Uganda has recently passed a law where you can't transact more than 1 million. I think it's 1 million mobile money. And then some of you say, I paid via mobile money. I sent to my uncle in the US. But even if you're sending uncle to relatives to buy for you some of these goods, you use Western Union or you use any other money transfer agencies, they should have those documentations. So have your evidence of how did I transfer this money. You have your bank guarantee. If you have your bank receipts, you have your financial, maybe credit instruments. For those of us that the bank comes up and guarantees you and you've not paid cash, then let the bank give you that guaranteeing document, okay? Then have your financial documents in place. And finally, are the regulatory documents. Regulatory documents, are documents which ezetagisa for you to be able to do some businesses in Uganda. Say UNBS, we have, that is the body that regulates business in Uganda, which is UNBS. It requires that some items you need to have like a PVOC. Some items you need to have permits, especially items which are restricted. They tell you if you're going to bring in drones in the country, they are restricted. You don't just go and import them. You first go and get permission from the Ministry of Defense. If you're going to bring in seeds in the country, you first get a letter from Ministry of Agriculture, because just one seed can kill the whole country and farmers. So you need, then you're bringing in used clothes. They are telling you first go and look for that sanitary certificate. It's called the phytosanitary certificate, the one for used clothes, or maybe they ask you for fumigation certificate. Those documents, rules of origin. You're bringing your things from East African community, and you want preferential treatment because East African community, some taxes, goods that come from East African community don't pay those taxes. So how will that organization grant you that benefit if you do not have these documents, regulatory documents, ladies and gentlemen? Tugenda fenga abasuubuzi, fenga abantu. We are going to, now, those are the documents that you need. Once you have those documents and your documents are in order, Customs has no right whatsoever to deny you your transaction value method. I hope we are transaction value method. Tuchasoma. Let me look. Did you ask any other question? Let me see regarding transaction value method. The other question that you asked is that that is commonly asked, as I do my consultants, is the invoice price the customs value? The answer is yes or no. Yes, if, remember the adjustments that we talked about, okay? The compulsory adjustments, the commission only, the selling commission. Buying commission you don't include, we don't consider it. The selling commission, buying commission is where you, the seller, you just decide as a person gwe ogenze gule bintu tomanyi katale China nofuna omuntu n'omusasula n'akutwala we babitunda. That one we don't consider. Naye if the buyer abitunda is the one who said paid a broker namugamba geno nondera buyers, and then this seller goes and pays brokers, definitely they are going to include the broker fee as part of you gwagula ogenda zisangamu. So once we get that brokerage fee that the seller has paid out to a broker, we add it back. So for as long as you've added your commissions, the cost of containers, packaging, the assist, the royalties and license fees, the proceeds that are coming in, the cost of transport, and then the cost of freight and insurance, for as long as you have added those costs already in the invoice, then that invoice value is the customs value. But if you've not added, ladies and gentlemen, then it means it will not be, because customs will go and have to adjust that value for all these costs. Sibamaze? Okay, good. What is, okay, cut, now we've finished the transaction value of, the transaction value, which is the primary method of valuation. And that's why I've spent a lot of time. Now, ladies and gentlemen, that agreement that we go back, it's called the customs valuation agreement, okay? Now, that agreement says that customs has a right to satisfy themselves to the truth and accuracy of your documents. So in the event that they do not get satisfied and you do not have all these documents, ngagwe you're saying that's too much work. Tobina. Ladies and oba byange nabigula mu auction or I just pick them on the road. Thank you. We shall I will still teach us what happens, what that agreement says. That agreement says and empowers customs to go and look for the transaction value of identical goods. Identical goods meaning goods which are the same in all aspects. Like if you've brought in an iPhone 5 from UAE, then it gives customs the power to look out for who imported that same iPhone from the same country that you brought in those quantities, because I want us to understand and answer one of the questions that said, "Naye customs, why, how come URA gives different values to different importers?" Ladies and gentlemen, tuli basuubuzi musumbuzi munnange, omuntu bw'ajja mu dduuka ly'omu kikuubo, omu n'agula katoni 10, omu n'agula piisi emu, ddala values obawa ziba zeezimu nedda. So that is why actually customs goes on and considers those aspects of trade, and that's why you can find one invoice person was maybe they honored their documents, they were maybe at $2, and others were maybe at 1.8, and those were their documents, transaction value, and all of them had their documentation. The reason is that the commercial values, the commercial levels vary. So these values, or some of you will know even with China and whichever country that once you negotiate, they will give you values sometimes depending on the quantities that you are buying. So customs goes out and looks for people who brought in the same goods. Boba, it's same in all aspects. Customs valuation agreement provides that once customs can't grant transaction value for reasons that we saw above, the documents are not there and all that, it gives customs the powers to apply transaction value of identical goods. Identical goods being goods that are the same and similar in all aspects. If we are comparing iPhone, we are comparing iPhone, okay? If we are comparing, we are doing Samona, we are talking about Samona. Coca-Cola. Secondly, and those goods should have been imported anyway at about the same time and in the same quantities as what the goods that are being valued were imported. So the quantities and the timing should be around the same time. Around the same time being in maybe 3 months, and reason being that market reasons change. If the value then cannot be determined by transaction value of identical goods, then the law provides that the value is determined based on the transaction value of similar goods. Similar goods in the aspect of goods which are not necessarily the same, but they have the same characteristics and perform the same thing. If I don't have Samona, I have Baby Jedi. If I don't have an iPhone, what brand is close to an iPhone that you're going to compare? Maybe Samsung. You can't begin maybe comparing some brand Chong versus iPhone, no. So you look out for items which are relatively the same, have the same, they substitute each other. If it's not Shell, it's Total. If it's like, you look out for brands which have the same reputation in the market. So they look out for goods that were imported by someone else who had full documents, and they released on method 1 and brought goods from that country that you're bringing from, and those goods were almost in the same quantity of the goods that you are bringing in. Now that becomes the third method of valuation. The fourth method of valuation is the deductive method. What is deductive method? Deductive method is where you go and get the value of the goods on the market, okay? That's now that's method 4, okay? Method 4, which is under Article 5. So the value at which those goods are trading on the market, and then you work backwards. Say if I am looking for around the same time when I am looking for the value of those goods, the goods that I'm valuing, I can't find them, okay? The people who brought around the same time, but these goods are being sold on the Ugandan market, for example. So you go and look at how much is this good selling at the market. And when we are, when this law is talking about, it says and emphasizes, look out for wholesale. That the people who are selling in the highest quantity possible. Reason being that those wholesalers most likely have added, there's less of every person adding in their profit. And like maybe goods where you will find maybe if the ones who are being sold maybe online like Jumia, maybe there are third parties who have come in. You go down to the people who are doing wholesale. How much are they selling? Then work backwards. Remove the taxes they could have paid for those goods because by working backwards and looking at the rate. Remove the commissions that they could could have paid the people after the goods have reached Mombasa, all costs that have been incurred from Mombasa to the point of being that good sold. So you go backwards, working backwards and removing, including the profit margin that this person could have added. So you work backwards, and once you remove, whatever you remain with is what you consider as the customs value. Ladies and gentlemen, if that value can't still be determined, that law provides that there is another method of valuation, which is going to be computed value method. Computed value method that's now the fifth method that we are on. That method requires that you work. You begin you begin computing the costs that are involved in the production of this item that you are valuing, or they are valuing, from zero. You assume you're the manufacturer. Look at, if you're saying it's maybe a plastic bottle or something, look at the molds that are involved, the value of the raw materials, look at the labor, the fabrication and the labor that was involved in the production of these goods, look at the profit that a manufacturer would have included and put, and then also put general expenses. And these general expenses should reflect, should be in the quantities that other people that produce those goods actually include. So when you put those costs together and add them up, then they should be able to form the value of the goods. Now, with all that, ladies and gentlemen, if that also fails, that law, the agreement that we are learning about today, provides for the fallback method. Now, fallback method says, thank you for all these rules that you set in these methods. Then tells customs URA, bagende, they relax the rules above. If they are saying at and about the same time, and there are no people who brought in those goods in 3 months ago, but there are people who brought in those goods 5 months ago, then go backward 5 months and pick the value. If you're saying you're bringing maybe 2 containers, well, there's no one who brought exactly 2 containers, but there are people who brought maybe 4 containers or 1 container. It says, okay, look at the value of those people and then adjust for the difference in the quantity and arrive at that value. And then that's what you give as the fallback method, which most of you keep saying, oh, values, simanyi majimpa. Now, that is, I know, these are things that we be teaching, I be charging for, but I'm giving you free of charge my Business Hub UG community, and every reason for you to actually click now that subscription button and learn more. That is in regard to valuation. Does customs have the power to reject? Does it have the right to reject the customs value if we do not agree? Ladies and gentlemen, that agreement on customs valuation provides customs with the right to ask the importer for as many documents as possible and satisfy themselves with satisfy themselves to the truth and accuracy of those documents. If they are not satisfied, then that document gives them a right to go on and reject your transaction value. But is that all? No. Ladies and gentlemen, where does the law leave us? The law provides for you as the importer. It gives you the right to ask you customs to justify and to provide and take you through how they arrived at the value of your goods. So you satisfy yourself, you ask for engagements, meet them, and ask, how did you arrive at the value of my goods? And then they're able to take you through. Once you fail, you reach an agreement and a decision is done. But if you meet them and you're not satisfied, ladies and gentlemen, the law provides and gives you power to go on and take on action. For as long as, the question here is that most of you ask, as we deal with the clients, as I advise the different clients, or what we do for our clients, really. Once you're not satisfied with the value that has been appraised with customs, what is your remedy? Number 1, appeal to the manager, DPC. DPC is Document Processing Center. Those are the people in customs that finally allocate those values and make the decision. The manager will give you a ruling in writing, either through the touch point URA has a tool where it interacts with its clients. It's called Touchpoint. The link is up there. You go to the Touchpoint, lodge it. If you don't have to move and get on the plane to chase your goods and bring and take letters to URA. Now, if you submit and then they respond and you're not satisfied, the law provides you appeal to the Commissioner Customs. Attach that letter and appeal further and state your reasons why. The Commissioner Customs is supposed to respond to you. If you are not satisfied with what they have responded, the law provides that then you can appeal to the Commissioner now, the Commissioner General of URA. If you're not satisfied with the decision still that has been given to you in writing, ladies and gentlemen, now that is where TAT comes into play, the Tax Appeals Tribunal. You are allowed, you can go on and file your cases with the Tax Appeals Tribunal for hearing, for an independent body like that to come in and hear what your concerns are. And in there they have different mechanisms. There's the dispute resolution mechanism where they allow you to settle cases out of court. You talk and say and understand the facts. If that also doesn't happen, then the court goes on and rules and takes the final decision. So, ladies and gentlemen, that's the process that you have to go through. Muchaliyo? Okay. Now, the other question that I usually get that are common, can I be prosecuted in courts of law for criminal offense if I infringe on customs value? Yes, ladies and gentlemen. Once you provide wrong documents, forge them, misinformation, anything that is contravening, by the way, Customs has the power to prosecute you and put you in the courts of law. So do not fall prey.